This is the briefing for Friday, May 10th. For the last couple weeks, we've been talking about a counter-trend rotation that the indices appeared to have been in for at least the last 2 weeks. Now, this is a 60-minute chart of the spiders. I'm going to just use this as an example, and I've been discussing this in the daily briefings for subscribers, and I've also been discussing it in the weekend briefings as well. Now, it's important to remember that markets run and pause in all degrees of time, and that means also that they're fractal in nature. And we also can tell that there are certain chart patterns that develop in a fractal nature also. Now, the point that I want to get to is that when we had this move to the downside, now this was the beginning of a move off of the all-time highs in the spiders. Now, the Qs and the Russell, the IWM that I track as well, basically have done the same thing. Now, when we came down here, we formed this low, we got this move to the upside, and then we got this move back to the downside. I did this briefing. I think this was May 22nd, April 22nd. And what I said was, I talked about the fact that a lot of times you get a counter trend rotation, and they have different characteristics. And in some cases, they develop in 3 steps or 3 legs, where you have a first leg, a second leg, and then a third leg. And then some of the time they develop into that 3-step rotation where there's equality between legs 3 and leg 1. In other words, leg 3 is equal to leg 1. And I projected that out at that time, and that projected to come out right about this area here, which is about the 507 area. And that's exactly where the spiders came to. Then we got this move to the downside, and I remember discussing the fact that sometimes also if you are looking at, or if the market is developing in a greater degree time frame, in other words, not a 60-minute time frame, but possibly a daily time frame, that this is a 3-step. Leg 1, leg 2 could develop, and leg 3 would come in at some other point in time. Now, in this case, this developed into a leg 2 when, as soon as this stopped right here and it started this rotation back up again, it became clear that this was going to be a more complex counter trend rotation, where this is leg 1, leg 2, and leg 3. And leg 3 projected to come in right at 510, and that's exactly where in the spiders it came to before we saw this rotation back to the downside. Now, in this case, it was important to see leg 2 getting taken out. Without leg 2 getting taken out, then something else was in the process of developing. And you can see on this day we had basically a rotation, then an attempted breakout to the upside, a rotation back down, and then of course over the next 2 to 3 days we had this move. And when this high was taken out, then the possibility was that this was a 3-legged 1, a 2, and a 3, but then this, in a much greater degree time frame, is a leg 1, this is a leg 2, and leg 3 is developing or developed. Now, I projected that where this red trend line is to come in right around the 517 area. That's where there's equality between legs 1 and 3. The important aspect of this is that it doesn't always have to be equality, but it gives us a point in time, or a price point to look at, where we could see potentially some type of rotation where the main trend, in other words, this trend, could re-exert itself. And you can see that we did get a pause right at the 517 area. Almost for 2 days of trading, we paused right at that 517 area, and then we had this move to the upside. So that then suggests that one of 2 things are happening. Either this is not going to, we're not going to have equality between legs 3 and legs 1 here, and it's going to extend up higher, or this was the bottom and this is the beginning of a new move to test the all-time highs. Now, I want to change this to back to a daily chart, because I think this is important. Now, keep in mind, this is a trend. This is a series of higher highs and higher lows. So this is an uptrend. This was a greater degree time and price counter trend rotation. The question is this done, and we are going back to these new highs? All through this, it appeared that it was not done, that we were going to see another leg to the downside. Now, what I did was I took this and projected that this was leg 1, this was leg 2, where would leg 3 come out? And it came out right about the 490 area, assuming this was going to be a greater degree time and price counter trend rotation. Now, because we exceeded by so much, it now appears that we are going back to test the all-time highs. But now if we look at this a little bit differently, we are in a rotational pattern. And you can see that right through there. You can see we go all the way back to February 13th, where we get this rotation up, a rotation down to test 490, and then another rotation back up to test the 525 area. So it's going to be important to note then what happens when we reach this area, in which we're pretty close to it right now. I think today's high, let's see, today's high was 522.64, so we're pretty close to that right now. The other thing that is happening that I think is important to keep in mind is that when you approach a key reference area, support or resistance, typically if you're going to see a breakout, you're going to see volume beginning to increase, you're going to see the internals of the market beginning to increase, you're going to see strength coming into the market. A lot of times there's a pause, and as traders try to rethink whether there is enough strength in the market to go to break out. But a lot of times you'll see the market weaken as it comes into this area, which sets up the potential for a rotation, another rotation back to the downside, or at least to some degree. Keep in mind here that we're at and approaching a very important resistance area. Now look what's happening with volume. Volume is falling off. Volume actually in the last 2 days of trading were below the normal level of low volume that we've seen going back all the way to the beginning of the year. Now we did get a tick up in the spider volume in today's trading, but we also had a double distribution day where we did not have buyers or sellers be able to gain control of the market. Now, I don't know if you can see it here, but there's two. There's a buying tail and a selling tail. So neither buyers nor sellers could gain control of this market. And you can see we have a divergence in market breadth. Breadth is declining as well. So without volume and without market breadth, it appears to be a higher probability that the market's going to struggle to get through this 525 area. If and when that happens, you're going to get a rotation down. Now, I can use this as an example here. You can see this shorter term time frame of rotational area, unable to get through the 525 area probably 6, 7, 8 days in a row. That led to this move to the downside, and then you get this impulsive day through the lower extreme or through support until it finds a stopping price, and then you get the rotation back up again. So without the internals strengthening, it's going to be difficult to see this market trade much through the 525 area. But we're going to have to watch the internals very carefully. We may get a pause in here, and then we may get a breakout. But it's going to be important if we do trade above 525 that volume is going to have to increase. Volume is the fuel that drives this market. Without this trend here, or even referring back to this trend here, as being an uptrend, for that to continue, it's going to have to attract new buyers. And right now, the new buyers are not coming in, even though we had a small tick up in volume in today's trading. And we need to see more shares trading higher as opposed to lower. Now, looking at the Qs, you can see we're basically doing the same thing. I projected that if this was a leg 1 and this was leg 2, then leg 3 would come in right around the 405, 406 area. If this was leg 1, leg 2, and leg 3 should have stopped right around the 440 area, and it's at 442. So the Qs are really within the area of equality, being leg 3 to leg 1. Volume absolutely collapsing in the Qs, and breadth diverging as well all through this third leg here. So while the spiders would suggest that they have the opportunity, and you really could make a case where they are testing the all-time highs right now, the Qs are telling us that potentially this three-step counter-trend rotation theory may be still in play. Looking at also, you can see the rotational pattern that the Qs have been in as well. So either this is a three-step counter trend rotation and we're going to see another leg back to the downside, or we're going back up to test 450, the upper extremes, and then we'll have to determine whether there's enough for a breakout, enough strength for a breakout, or we're going to see another rotation back to the downside. In the terms of the Russell, you can see the Russell is doing the same thing. I projected it to come in right around the 204, 205 area for the equality between legs 3 and 1, and exceeded it slightly. But you can see the rotational pattern the IWM has been in for quite some time as well. Volume collapsing, Russell breadth collapsing also. So while it appears that in terms of price development, the market wants to go higher, there's really simply no selling pressure right now, and the internals are continuing to weaken, which would suggest then that there's not enough strength in this market to drive price higher, and it may take a news event to do that. In terms of to the downside, what we need to see is we need to begin to break through short-term support levels, and if we break through short-term support levels, then we need to see the internals supporting that breakthrough as well. Now, in terms of where we are in being overbought and oversold, you can see we're basically neutral. This is NYSE, this is for the NYSE, and this is for the NASDAQ. And you can see that we're basically neutral. So this really gives us an indication that the market could go in either direction. But right now, even though we had some movement to the downside during this week, the open, I think it was Wednesday, we opened up lower, and then we saw buyers come in and sellers just absolutely vanished. So the open, we had an opening gap, and then that gap was closed, I think probably within the first 30 minutes or first hour of trading. So there's an absence of selling pressure as well. So it's going to be interesting to see how this resolves itself. Now, looking at one more thing, this is the percentage of stocks above their 50-day moving average and the percentage above the 200-day moving average for the S&P 500. So you can see here, we're right now only 56% are above the 50-day moving average and 76% above the 200-day moving average. Now, if you follow the crosshairs here, if you go back to this peak here, that was at the higher price here. So you can see that we were at about 80 to 83% of stocks above the 50-day moving average at this high that the spiders are getting ready to test right now. But today we're only at 56%, 57%. In terms of the 200-day moving average, you can see that we were at approximately 82% above the 200-day moving average, and today we're only at 76% above the 200-day moving average. So you can see there's a divergence here as well in the percentage of stocks above their 50 and 200-day moving averages. This is the same thing for the NASDAQ. 50-day moving average, the percentage above is only 47.19. Going back to the highs here, we were at 57, 50, 58% above. Same thing above the 200-day moving average. And for the Russell, it's the same thing. You can see at the highs, we were at 64% above the 50-day moving average. We're only at 53, 54%. And the same thing with the 200-day moving average. So basically, we are at a point where we can see that the spiders at least are wanting to test, or are testing, I should say, this all-time high. But the internals are certainly not confirming it. And one more thing, let's look at total volume. Total volume on the NYSE, look what's happening. It is absolutely collapsing. Total volume on the NASDAQ, absolutely collapsing. So volume being the fuel that drives the trend, it is certainly running on close to empty. So it's going to be important next week as we see price development to determine what's happening from an internal analysis and perspective, to give us the potential opportunity to understand that we may be in the process of seeing a much greater degree time and price move once we determine whether this is going to be a breakout to new highs or whether we're going to see that rotation back down. And honestly, If we don't break out and we get a rotation back down, we're going to be moving from 525 down to the 490 area. 35 points in the spiders is nothing to sneeze at. So, going to be an interesting week next week. I'll be updating this daily for subscribers. Have a great weekend, and I'll pick this back up on Monday.